Hey traders, how you doing today? This is Rick with Hit and Run Candlesticks, and it is Thursday, December 30th, 2021. Let's take a look at the market here, and then we'll take a look at, we'll break some charts down. How's that? So, yesterday we ended up with a doji here. Previous day, another doji at the top. It kind of looks to me like what's happening here is price got a little bit ahead of itself, which I think anyone would agree to that. Bullish, 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 just a little too steep, a little too fast. And then, like I said, what appears to be happening here is a little consolidation. As we consolidate, it allows moving averages to catch up to it. So, for instance, here's the T-line, and you can see it running up and getting closer to price. This is the 17 EMA, the Trendicator right here. It's also moving up and getting a little closer to price, and then everything in between as well. And what that does, it allows price to digest this move a little bit, and then you've got moving average to help support price up here. So far I have to be bullish until we break down. Anything below yesterday's low, which is about this 475.98 area. See here, low 475.92 is the low. Maybe a little concerned, but not overly concerned. It's a breakdown below the T-line that will concern me. And if you just go back and look at any chart you want, you can see that we're trending up. Once we crack the T-line, there tends to be a little bit of movement to the downside until it cracks it back to the upside, and then we rally. Now, and it doesn't happen 100% of the time. Here's a pullback that closed below the T-line, but it immediately came back, and then it went down. So I follow the T-line pretty closely for that sort of thing. It's terrific for swing trading, at least the way I swing trade. It's a terrific little moving average to use. So anyway, that's the SPY right there. Let's take a look at some charts. We'll break them down and see what we can come up with. Here's a little Biotech that I found yesterday or last night. After the market closes, let me talk about that real quick. After the market closes, what I do is I have live trading alerts, my scanner, and I go through that, filtering out a list of charts. And then early in the morning, what I do is I re-look at those charts. I look at the scanner again, see if anything's moving pre-market that I might like even better. And then I choose some stocks from that based on some criteria. But all the criteria is built into the scanner. And then I might compare one stock to another. I mean, when it really comes down to it, I can only talk about so many stocks. I only have so much time here. But, man, I got to tell you, there's a ton of charts out there. And having the ability just to scan through them in real time is really, really cool. But anyway, I do all this after hours or pre-market. All right, let's take a look. So last night, I found this little BLU here, a little Biotech. If you like Biotech, it's an $8 chart. You can see here that we've popped up. Boom, nice big pop. And here we've pulled back here. So what I'm kind of looking for is that buy signal in there. A buy signal to me would be something pretty clear. Or it can be a candle pattern, like maybe, let's do this, a morning star. So we're actually set up for a morning star right now. There you go. So we've got candle 1, candle 2. Candle 3 here is setting us up for that bullish morning star. So might look to place an entry on this. Although today, I'll tell you, I'm not doing any trading. Tomorrow I won't do any trading. But it doesn't mean that I don't want stocks on the watch list. So that's why I'm still doing this video here. All right, so looking for an entry inside this box right in here. And then I'm looking for price to move up to $9.60. If we can get through that $9.60 and find support, then I'll be looking at about $12 up here. Now, as we all know, but I do want to remind us that stocks just don't go like that. You can have a bullish day, and you can have not so bullish day. Doesn't mean that trade's not any good. However, it might be wise to take profits into strength. When it starts moving again, then we can get back into that chart, understanding and realizing that we're going to have little bad days. Just take a look at that chart. There's all sorts of bad days in there, but a lot of good days as well. A swing trader wants to look for a string of good days. Alrighty. Oh, and a stop below 730 would not be too cool. And, you know, that stop right there is not based on an entry up here. If I was to buy it up here, I would have to move that stop way up, maybe to 760, possibly even a little higher. It's so important for each trader to use their own rules. That is so important. If you get a chance to come into the trading room next year, please ask us about that. And, let's talk about putting some rules together. Heck, you might have a great set of rules that I need to adopt. So, anyway, rules, very important. ACET. So if you're looking for a little bit of risk out there, if you're looking for a little bit of excitement, this might be a chart for you right here. ACET. This is another little biotech, little $16 chart. Had a terrific little move right here. Terrific little gap up. And really all it's done through here is consolidate. So consolidation, you don't want to play too much around that. It just chews you right up. But all of a sudden what I'm seeing here is this breakout right there. This breakout. And we pull back and we test it. And now the bulls are coming in. If we take this little move right there and this down move, we've got a nice little bull flag setting up in here that we're breaking out of. So what we're after is follow through over yesterday's candle. Anything below 1490 would not be so good for somebody that bought it in here. Targets, possible areas for it to go to. Let's be careful with the whole quote target thing, if 1665 and then maybe $20.40 up here. But the first thing we're going to have to do is see that bullishness fire up. Again, this is a chart that kind of low volume. Over here it had no volume whatsoever, but some people like these charts, and every now and then I post them out there. All right, let's take a look at Nokia, break that one down a little bit. So one of the things I look for in a chart, I think a lot of people look for this sort of thing, is when a stock is in a trend, it will stay in the trend until it's no longer a trend. So just taking that concept right there, you can see how Nokia has started working. And right now I'm just using the Trendicator as the trend, and green dots right in here, which means this is a trade anywhere in this large area. And this is a pretty large area. So what I'm going to do now is break it down to the T-line, maybe a 3/8 trap, price action right in here. So I've got this line drawn at 1620, this red line, and that's right there at the T-line. So I think based on what I like to see in a trade, as long as we can swing above the T-line, then that is going to be the trade for me. Once, let me do this here. Let's draw that up. And this right here represents the T-line. So if the trade here, let's say, bopped along for a couple of days, and then all of a sudden broke the T-line, it just seems logical it's going to come back down toward the extension of the Trendicator right in here. And see, I just don't know if I want that kind of loss sitting in my plate. And here, let's put the buy box in here. So if I was to just take this right there and take this, and we'll take, this is today's candle so far right here, right there. And I'm going to put that, there we go. This is the pre-market this morning. Again, this is Thursday the 30th. So here we are up, and you've just got to ask yourself, do you want more than 2.5%? And that's not horrible. It really is not horrible. But you just have to ask yourself, is that what you want? Or do you want to keep it above the T-line? Anything above the T-line, I'll look at as bullishness. Okay, so with all that said, if the bulls continue to bring Nokia up, I'm looking for 680, 720 up here, and then we can reevaluate from that level. Here's a nice chart. I love this chart. ON, little semiconductor. So breaking this one down a little bit, you can clearly see, let's do this. I'm going to put this little thing right there. You can clearly see how we have this sideways consolidation, this chop area. Well, now that we've broken out, what this suggests is the bulls are still very much involved. It does not mean that it has to be bullish today or yesterday or tomorrow. That's not what that means. What it means is the bulls are still involved. And as long as we stay above this consolidation area, at least for right now, then the bulls are still there. There's more buyers than there's sellers. So as I look at this, what I'm looking for is that rally, which we certainly have that rally right here. And then I'm looking for a rest period. This is setting up in what we call a 3/8 trap. It's also setting up for a possible bounce over the T-line or a scan we have, close to the T-line, something like that. A nice little pullback, a nice little flag. So what I'm going to be watching for is those bulls to start moving and pushing us up. Now, at the same time, I want to make sure that the market is also cooperating. So let me show you something here. This is something with live trading alerts. And these are yesterday's numbers, by the way. But I can see FNGU yesterday, with the FNGU charts were only 82% red. That's horrible for the market. That's very uncool, not good. The Qs, 61% red. A green, good grief, Rick, green. While that is marginal, it's not a great number. We like to see this above 65, but we'll take 60. The SPY's at 67, so that ended up really nice yesterday. The Russell at 62, that's okay. Check out the diamonds, 70% green. So as I'm buying a chart, I want to make sure that the overall market is on my side. Say everything here was, let's say, like FNGU here, 82% red. I don't want to be I don't care how good this looks. I don't want to be buying ON if everything across the board is 82% red. Just not a good plan, not at all. So I want to make sure the market has my back, and this is something I look at right here. Okay, so assuming the market is on my side, and assuming the market is working in the right direction, then I will look at buying this as we're inside the 3/8 trap, or let's put this line up here, or even a breakout. Just a nice, let me get my tool, there we go. Even if we started to break out today, that could be a buy. We don't have to buy cheap. We don't have to buy cheap, not when we're looking for areas like this to make some money. So let me see if I can remember this. Somebody asked something yesterday about swing trading or something, and I think if I can remember what I said, oh, doggone it. Something about swing trading, buy low, sell high. There we go. Swing trading, buy low, sell high, but low is not always what you think it is. So for instance, ON here, you didn't miss the trade back here. Sure, you missed that trade. Yeah. And if you didn't buy it here, yeah, you missed that trade. But this is a whole new trade. So when price, let's assume in fact it does, let's say price gets up to these levels here. That all of a sudden makes this a low, right? So when you're looking at charts, it's not always about picking bottoms. In fact, I think that's an absolute horrible idea. We want to stay with the trend and play the little pullbacks. So let's take a look at this chart. Look at that longer trend there. Look how our Trendicator is still green, right? Had a little dip to the downside, red, and then now it's picking back up. We broke out of the consolidation. We're holding support. We're looking at this for a target up here, these two areas for targets. This makes this low. Buy low, sell high. Hope that helped a little bit. Okay, let's break down AA. AA is looking awfully good here. All through here, I think one could say AA was pretty much just doing a lot of nothing. Let's see. I'm going to have to draw it here, and then we'll leave that little whipsaw out of it. There we go. There we go. So you can see here that AA was just doing a lot of nothing, a lot of chopping around. Swing traders that might have bought it probably lost more money than they made overall, would be my guess. Well, now that it's starting to move, this, again, you don't have to buy it down here to make money in swing trading. Now that we've broken out, we establish a new floor. So right now, I'm going to use 56.85 as a new floor. Here, I think we can actually do this. Whoops. I guess we can't. Never mind then. Let's do this. There you go. Nice buy box. This is the new floor. So now we're looking to buy low, and we're going to be looking for $70 followed by about $80 on, bullish continuation. So this will be the high. So now that we've broken out, this suggests the bulls are still involved more than sellers at this point. And as long as we stay above that 56.85, we'll shop for that entry. That entry could be a couple of things. It could be maybe today breaking out. It could be maybe nothing today, nothing tomorrow, and maybe Monday we do that. Or even inside that box, we decide to buy it in there. And then at 56.85 would be a stop area for sure. And then we'll look at making money on the swings up into here. Those two green boxes. Okay, let's take IGT. So IGT, we've moved up here pretty good. And now we've pulled back. A little profit taking in here. That was a nice move. So it makes sense to take some profits. Well, here we've rallied up and we're pulling back a nice little, what we call a PBO, pullback opportunity, watching for that buy signal. We're also going to be watching the market. Remember, I want the market on my side. I want the market going in the right direction. I want the SPY 65% or plus green. I want the Q 65% or plus green. Those kind of things. That's what I'll be looking for. I see that buy signal. First target I'm going to be looking at is about 32. Once we can find support and show strength over 32, we'll look at 38 and then on up there to 40. Below 27.56 right now would not be healthy for this chart. I say right now because if the chart was actually bought, say it was bought up here at $30.39. Well, I certainly don't want a 9% stop. so I have to move that stop up. This is why we preach so much. Have your own rules, learn how to set up the chart, and if you need help with that, come on into the trading room and we'll try to, and ask specific questions. Ask specific questions in the trading room, and we'll do what we can to help. Okay, I've only got two more here. MRO. I think MRO is setting up quite nice. Here we've rallied up. We've pulled back a little profit taking, a little bottoming action going in here. Below 1590, not too cool. Inside this area looks like a buy area to me. It would also make sense if we waited. I mean, we don't have to force ourselves to buy anything here. If I decided that I think I'll maybe wait, then there's nothing wrong with waiting for a breakout, because we're looking at these areas for targets. This $19, this 21, 22 area as targets up here. So remember, swing trading, buy low, sell high. Low does not mean down here. If we have a nice run like this from here, if we run up and consolidate and set up again, this is low compared to these areas, the swing areas. And the last one I have here, before I do this one, I just want to reach out and say thank you, everybody. I do appreciate you all watching the videos. For those that hung out with me to the last of this video, a super thank you, and I really, really appreciate it. Thanks a lot. Alrighty. So here we go. We have a low, we have a high, we have a higher low, and here we've rallied up. We can draw a line on this, something like that. You can see we've broken out below 53.66. Would not be good for this particular setup. We'll look at this area for a buy area, maybe a trade only up to $58. We clear 58, find support, then I'm going to look for 67, 80, and 92 up here. And again, following price and support as we move up. Alrighty, thank you very much, everybody. I absolutely appreciate it, and I would love to see you in the trading room next year. Alrighty, thanks a lot. Take care.